It's great to be back in the studio today with financial instructors Kirk Cassidy and Michael Mazarin, and we're glad you're with us for another edition of the Retirement Education Hour. Here on the program, we talk about all the topics, the pressing issues that you have to grasp, get your mind around, and really understand in order to enter retirement with confidence. And we've got another great program lined up for you today. Reminder, you can find this show wherever you download your podcast. Just search for the name of the show, Retirement Education Hour. We're also going to be telling you about how you can take advantage of the Retirement Education Foundation's courses. These are classes on retirement planning. These are like master's level classes. They're appropriately held at major colleges and universities right in your community. We want you to stay tuned for details on how you can reserve your seat and be there and meet financial instructors just like Kirk and Michael. And Kirk, Michael, I want to dive into this topic today. I want to talk to you about risk in retirement. You know, there are real risks that we have to acknowledge. There are also perceived risks. And boy, it's important to create that line of differentiation between those two so you're focused on the right thing. Tell us what you mean about real risk versus perceived risk.
Well, it's a blurry line, Megan, right? So I'm super excited about today's show because what we recognize, and I think it's important actually before we start, Michael, Megan, is that we remind people we are a national charity, a charity that's been around for over a decade, teaching those people within 10 years of retirement through retirement. We have taught over 10,000 people, all in major universities in areas around where you live. University of Michigan, Eastern Michigan, Michigan State, Oakland University, University of Missouri, Columbia College. We're Wayne State, with many more universities to come. We've taught over 10,000 people what this is, almost like a master's level course, 8 hours. So this course and what we're going to talk about today is we're really designed for that person approaching retirement or in retirement with $700,000 of investable assets all the way up to, say, $20 million. That's the target. So these are a little more advanced strategies. And this topic around risk, real and perceived, it's a blurry line because there's a lot of risks that are real but often used to manipulate people into making poor decisions, working with them as hiring the wrong advisors, buying the wrong products, where there's a real risk, but they're manipulating your fear, anxiety around real risks to get you to do things that aren't going to produce best outcomes. So I think today the goal is to discuss some of the real risks, perceived risks, and how they're going to leverage and manipulate your fear and anxiety, much of which you aren't even familiar with yet, but there's going to be a tremendous amount of fear and anxiety as you age, as you retire, that they want to take advantage of that by using real risks, creating more anxiety around that real risk. Michael.
So I think that fear and anxiety will be a really common topic today because, Kirk, to your point, there are a lot of legitimately dangerous risks out there for people who are not prepared as they're entering retirement. But the industry knows that people don't always understand truly what is a real risk versus what might not be quite so threatening to their retirement. And because people don't know that, they can take advantage of that and try to steer them in a direction that might not be beneficial for the person, but is much more beneficial for the team they pick to choose to work with.
Michael, I see what they do is so they have spent years conditioning you. Like, you need to protect your principal. You only need 78% of your income in retirement. You should only take 3 or 4% withdrawal rate. All these things we're going to talk about, right? All these, they've conditioned you to create these biases that they then will leverage and leverage those biases and fears to get you to do what they want you to do. And what they want you to do is spend less, work longer, because the less you spend, the more you work, longer you work, the more they make. So if you're interested in one of our 8-hour courses, and I would encourage you to attend, we request a $29 donation that goes to charity. And if you'd like to register for that course, Go to retirementplanningedu.org. That's retirementplanningedu.org.
And you know what's challenging is that a lot of these fears and anxiety, people get told by the industry that they're correct for having them. So they almost feel smarter. They almost feel more empowered that, yes, the person who I'm working with has told me I'm correct to be worried about the election coming up, or to be worried about, well, what happens if there's a currency collapse in a foreign country and I should be sitting on $300,000 of cash. All these fears that I have, they're telling me that I'm correct to feel this way. So I feel even more empowered now.
Yes, like when we have a market event, I should spend less. I should back down. And, you should protect your principal. So in other words, whatever dollar amount you retire with, you should have in your 70s, in your 80s. If you retire with $3-4 million, you need to protect that principal. Don't let it go down. And if we have a bad or poor market event, back down your spending. These rules of thumb are insane. They incentivize, and the whole financial service industry is conflicted. And that's one of the things that's a theme of the 8-hour class is how they are conflicted and how that you can get yourself educated enough not to do this yourself, but to identify whether the people you're working with or the people you're looking to hire actually provides real effective retirement plan that will let you retire earlier than the other person would let you retire, or earlier than you thought you could retire. Allows you to be able to spend 6, 7, 8, maybe 9% withdrawal rates as opposed to the general rule of thumb of the 4% rule, or will help you pay hundreds of thousands of dollars less in taxes, or will help you not have fear and anxiety every time there's a short-term market event or an election you don't like. So that is the goal of the class. And today's show is going to really, I'm just with full transparency, the purpose as a charity, our number one goal is to get you to attend a course so that you can find the right people to help you, the right teams to help you by knowing what you should be specifically looking for and what it should look like, not just how it sounds, because everyone's saying the same things now. You should Roth convert, worry about sequence of returns risk, all the same marketing words to get you to trust them, but you don't know if they're actually executing that. And that is the purpose of the class. And today we're going to talk a little bit more about fear and anxiety, risks, real risk versus perceived risk. So stick around. And if you'd like to register for one of our courses or learn more, go to the charity's website, go to retirementplanningedu.org. That's retirementplanningedu.org.
And stay with us. Plenty more with Kirk and Michael right on the other side of the break. So glad you've joined us here on the show today. This is the Retirement Education Hour. Megan Mozak alongside financial instructors Kirk Cassidy, Michael Mazarin. They're both with the Retirement Education Foundation. I want to give you the website at the foundation so that you can get registered for the courses that the foundation sponsors. And they hold these courses at major colleges and universities. And they are significant. They are very in-depth. These are not, fly by night, just some sort of random high level. They really go into the weeds. They go into the details. And boy, is that necessary here for a modern retirement. They are held at major colleges and universities. These are, you can really look at them almost like a master's level course on retirement planning. And we want to see you there. The best way to do that is to get registered right now. So I'll give that website. It is retirementplanningedu.org. Here it is again, retirementplanningedu.org. And if you'd like to call to register, you can do that as well. 800-240-8981 is the phone number. Again, that's 800-240-8981. When you go to the website, you're going to see a list of locations. As we mentioned, major colleges and universities are the site of these courses, including the University of Michigan, Eastern Michigan University, Michigan State University, both campuses there, Novi and Troy. Oakland University is another option. And then in the state of Missouri, you can attend at the University of Missouri, or Columbia College. Again, go to that website, retirementplanningedu.org. We've been talking today here on the program about risk, real risk and perceived risk. You know, there is a risk that we hear a lot about, and I know it's on the minds of a lot of our listeners, and that's running out of money in retirement. How should we be thinking about this?
Well, I think this is one of those areas that's a real risk, but it is used to manipulate and take advantage of those who are in retirement. And the message has been, and we often, 10,000 people we've taught in these courses, and every class. Every course, we begin by one of the things we do in the beginning of the class is ask everyone to raise their hand if they want to protect their principal. And I will tell you 90% of the people raise their hand that they want to protect their principal, which when I translate that, people then understand that, wait, that's not really what I want. See, think about protecting principal as whatever the amount of money you have at retirement. Let's say it's $3 million you have when you're going to retire. Does that mean you want to have $3 million when you pass? And for some people, legacy is important. It's legitimate. Now, I want to know, is it legitimate you want to leave a legacy because you want to leave wealth for your children or your loved ones, or is it a fear of outliving your money? And sometimes that can be blurry in itself. What we find is the majority of the people at the courses say, no, I don't want $3 million when I die. I'd like to have a controlled spend down of my principal. I just want to make sure I never outlive my money and my income. And so there's a difference. They know they're going to build and leverage that fear so that you spend less during times of market volatility. You'll spend less, and the less you spend, the more they make. The financial service industry makes from you, because it's based upon how much money they have of yours is how they get paid. So that's how they get paid, is you spending less, I make more. That's how they look at things. And there's a third variable to this, Michael, and I think you have a story to share around this, actually. The third variable is, if I tell you to protect your principal and tell you just to live on 4% a year, how much planning do I really need to do? How much work do I need to do? Or am I just going to sell you things and then have an intern or an administrative assistant or a CSA, as they call it in our industry, just use the planning software of eMoney or Money Guide Pro or Right Capital, spend 30 minutes putting in your data, and it spits out a probability of success 4% rule with a dial, and then all kinds of different charts, 30 pages of a probability of whether you're going to outlive your money or not if you withdraw 4%. So you have an 80% chance of success. So the way to make it 100% is you got to protect your principal. Instead of actually spending 50 to 100 hours building your plan, which we will teach you in the class, what a real plan looks like, so you can actually have a controlled spend down of your principal and never outlive your money.
So speaking of what a real plan looks like, the fear of running out of money for most people probably is, when it comes to retirement, the number one fear. That's, why don't you retire sooner? Well, I might run out. Why don't you spend more? I might run out. It's, for most people, the biggest fear. We had someone come to the class recently, and actually they stayed after the class was over to tell us this story. They recently received a voluntary package from their employer, a large national employer. They received a voluntary retirement package. They said they're in their late 50s, early 60s, net worth of roughly $4 million, and they told us they wanted to spend about $150,000 per year. And their current team told them, you're good to go. Go for it. Take the package, you're good to go. So he did. He took the package. Within 2 or 3 days, he told us, had anxiety attacks.
Like real anxiety,
medical panic anxiety attacks, because he said, once the reality of, I will no longer get a paycheck, there's no steady income stream anymore. Where is the money going to come from? Which accounts? Which tax brackets? Which investments? How long is the money going to last for? And every time he would ask his team, I'm having these concerns, they'd say, you're good, you're good, you're good. Here's the dial of success. You're in the 94% success range. Okay, what does that 6% failure rate look like? What's happening in those situations? How bulletproof is this? And of course, they say, well, nothing's bulletproof. You're on average, you're good. So he said, I was having anxiety attacks. Over running out of money. So he went back to his employer and he revoked the package. He revoked his own acceptance, and he's gonna work longer.
He rejected the buyout, and remind you, here's the numbers really quick. Around 60 years old, around $4 million, and desired targeted income was $150,000, and accepted package within 3 days, panicked and said, I'm going to continue working. That is so sad, Michael. It's because he didn't have a plan. He had this stupid e-money report, probability of success, and his team just said, you'll be fine, you'll be fine, you'll be fine. You've got to come to the class so you know what you're going to need to not have these panic attacks, whether you get a buyout offer or whether you don't like who's being elected or whether the market has a 2022 or 2008 event. So you don't panic. You don't have real plans. You don't have the right teams. That person should have been able to spend about $250,000 a year and have a bulletproof plan. Come to our 8-hour courses. We stream them live from the universities. So if wherever you're at in the country, you can attend, or you can come in person in the universities. 8 hours over 2 evenings or 1 full Saturday. Register at retirementplannинgedu.org. That's retirementplannинgedu.org.
And our show continues right after this. Stay with us. You're listening to the Retirement Education Hour. Always a pleasure to be alongside Kirk Cassidy and Michael Mazarin. They are both with the Retirement Education Foundation. Kirk and Michael, they are financial instructors, and you can meet them and other instructors with the foundation when you attend the foundation's courses on retirement planning. And these are held at major colleges and universities right in your community. Very conveniently located for you. And these are deep dives, almost master's level like classes. You can attend, you can reserve your seat right now, and seats do fill up quickly. I will tell you, it's a popular course. We want to see you there. Go to the website, retirementplannинgedu.org. That's retirementplannинgedu.org, or you can call 800-240-8981. You can attend a 1-day, 8-hour course, or you can break it up over 2 days. It is your choice. Again, go to that website, retirementplannинgedu.org. I want to get back into our program today. Great discussion on risk in retirement, real risk versus perceived risk. And we're going to continue that here in a moment. Want to remind you that you can listen to this show and so many others in our library. Find it wherever you download your podcast, wherever you find your favorite podcast, you can find this one. Just search for the name of the program, Retirement Education Hour. As we talk about risk in retirement, you were sharing a story about spending in retirement and the risk around overspending versus underspending. Tell us more about that.
So if you were around for the last segment, I hope you were. We told a story about a 60-year-old that had an opportunity to take a buyout, should have taken the buyout, and it was just the fear of whether they had enough. Their team wasn't making them feel confident. The probability, the e-money financial plan wasn't making them feel comfortable that they had enough. The reality of being retired and not getting a paycheck. Too many variables, 60 years old, tons of panic. Michael, at the core, 10 years ago, it's been more than 10 years, when we created the charity, one of the goals of this charity was stimulated by our frustration, a group of professionals in the industry, in the CPA world and attorney world, frustrated that the financial service industry for a lack of a better word, it was a scam. It was a marketing organizations. They're just selling people stuff, not doing real planning. And as a result, people working longer, way underspending what they should have because of fear and anxiety, lack of information, lack of finding the right teams, choosing their advisors based upon whether they like them or not if they're competent or doing the things they need to be done. They don't even know what to be looking for to do the things that they need to do. And this is another example, Michael. This story you shared last segment is another example that motivated us to start this course. It's very frustrating.
So to your point, before we jump into the statistics around the story, the frustration, aside from the outcomes, obviously, stemmed from the fact that when this person went back to their team and told their team, listen, you told me I was good to take this buyout. I am panicking. I'm not going to take the buyout. Instead of the team coaching this person, digging into their fear and answering their anxieties, the team just said, okay, that's fine.
Of course.
It's your choice. Keep on working. No big deal. Let us know the next time you want to retire. Because for the team, they're thinking, awesome. We don't need to send this person any income. Their portfolio is going to keep growing because they're still going to be saving. And we get to make more now because we didn't instill enough confidence into the person to go retire.
Less work, make more. That's the financial service industry.
And so this person's relying on that team to be guiding them through retirement. And not only are they not guiding them, in this case, they're hurting them.
So we can prove this. Again, like 10,000 people, we have over 10,000 people we've taught. And we collect a tremendous amount of data. And the data I'm going to share now isn't even the data from the 10,000 people we've taught, because our data is even more significant than what I'm going to share. But I'm going to give you the national data that the government tells us is that for baby boomers, when you die, you listeners, when you die, the average baby boomer will still have 80% of the wealth they had when they retired. Now, at first glance or first listen, you might be saying to yourself, well, that's a great thing. No, it's a great thing if leaving a lot of money to your children or your loved ones is your priority. And I would even still argue it's not a great thing, because you could have spent a lot more money, bought some life insurance, and then leave the wealth and legacy for the kids that way. But don't compromise your retirement. Like, you've got to change your relationship with money. You got to stop serving it. It's there for it to serve you now. You spent 40 years serving it, the money, to accumulate the money. Now it's there for you to do the things that you want to do. It's called retirement. And retirement can be fun and enjoyed in the golden years. It can be, if you know how to get and find the right teams to give you the best outcomes. And that's the whole purpose of the charity, Michael. That is it, is to help you to identify the right teams to help you to be able to spend more. This person should have spent $240,000 a year and retired right now.
And instead, they're working longer. And when they retire, if they have an actual plan built, they will spend. If there's no plan built for this person, they told us, I'm a cautious person by nature. I don't know how to change that. They're not going to spend more unless a plan is built for them that proves for them, look, you can afford to spend more. And that is another number you mentioned before in terms of the national data here. About 1/3 of retirees end up with more money when they pass than when they retired. And again, on the face, a lot of people hear that and they go, that sounds great. Well, if that was your goal, sure. Most people's goal is not to leave more wealth than when they retired. That means you could have retired sooner. You could have spent more. You could have done so many more things. And 9 times out of 10, it is fear and anxiety preventing that.
Michael, you nail it. That's all fear. It's all fear that has been promoted. They've been conditioned to believe. And then we use this expression all the time. It's not intended to be offensive. But the older you get, cognitively, things begin to change as you get older. Mathematics is the first cognitive skill that begins to diminish. We say older people aren't cheap. They're scared. And the older you get, the more scared you're going to get, especially around your money. And the critical mission of the charity is to help you find the right teams to help you and coach you so that you will spend, that you won't have that fear, that you'll save money in taxes, retire earlier. So all we ask you to do to attend one of our 8-hour courses is to make a $29 donation to charity. If you make a $29 donation to charity, you'll get to attend, and you can do it by streaming wherever you're at in the country. We teach these classes and stream them live from the universities, or you can come in person. If you'd like to register, go to retirementplanningedu.org. That's retirementplanningedu.org.
And we'll be right back right after this. We're glad you're with us here on the Retirement Education Hour. I'm in the studio with financial instructors Kirk Cassidy and Michael Mazarin. They're both with the Retirement Education Foundation. You know, the foundation makes this program available, and the other mission they have is around the courses we've been telling you about. And these are deep dives into retirement planning. In fact, they're really like master's level courses appropriately held at major colleges and universities right near you. Here's how you can get more information and attend. Go to retirementplanningedu.org. That's retirementplanningedu.org. You'll see a list of locations, dates, times. We want you to lock in the one that works best for you. Keep in mind, these courses are held at the University of Michigan, Eastern Michigan University, Michigan State University, both Novi and Troy campuses, Oakland University, another location. And in the state of Missouri, you can attend at the University of Missouri or Columbia College. Go to that website right now and reserve your spot. Retirementplanningedu.org. That's retirementplanningedu.org, or call 800-240-8981. If you're just joining us now and you want to go back and listen, I have good news for you. You can download this show. Simply find it wherever you download your favorite podcast. You can search by name of the program. Go to Retirement Education Hour, and you'll be able to find the complete library. Today's show is all about risk, real risk versus perceived risk in retirement. You know, market volatility, this is a risk, and Kirk, Michael, it makes people do some odd things, doesn't it?
Yeah, it does, Megan. Look, here's what I can tell you. Through a 30-year retirement, you're going to experience 3 to 7 major market events. 3 to 7 major market events. Now, here's the one that's more surprising to people in terms of volatility. Since 1980, on average, we experience a 14% drawdown on average per year. Drawdown meaning at some point in the year, the market goes down 14% on average per year since 1980. So that's volatility. Historically speaking, that's a lot of volatility, and that drives people to either if they're a do-it-themselfer or a professional advisor or money manager in our industry. It makes them believe somehow that they can market time or stock pick their way to driving performance. And factually, data tells us that doesn't exist. It can't happen. In fact, 40% of all mutual funds fail. 40% fail within 10 years. Not one mutual fund manager has ever in the history of mutual funds been able to stay in the top quartile for 5 consecutive years. The average actively managed mutual fund over the last 30 years is performing at about 4% when the index is performing at over 10%, the S&P 500. There's no proof anyone can stock pick or market time, but yet people in our industry, and it's because it's hard to measure. It's really not that hard to measure, but for the consumer, it's hard to quantify, measure. That is their perceived value proposition to the person that they're trying to get them, the people they're trying to convince to hire them, and it's garbage. And those of you trying to do it yourself, here's a crazy statistic. Ready? The average investor has an average annualized return of under 3%, folks. 3%, under 3%. That's crazy. All you had to do, here's the deal. Michael, 20 years ago, if someone took $1 million, their $1 million, and stuck it in the S&P 500 and walked away from it, didn't open a statement, and 20 years later opened their statement. 20 years later, today, it would be worth over $6.5 million. No one's beating that. There's not any money managers beating that. There's no financial advisors beating that. There's no do-it-yourselfers beating that. This is insanity.
You know what's frustrating is that there is such an avalanche of data that proves what we're talking about, that no one can stock pick, no one can market time. But despite that avalanche of data, some people just refuse to believe it, and it's because they want to believe that there's a team out there, there's an algorithm out there, there's a strategy out there that can beat the market. They want to believe it, and so they hop from team to team, from newsletter to newsletter, looking for that strategy, and along the way, they're just getting torched because they're going from this sizzly strategy over here to that concept over there, and all they had to do was buy the index. But because they wanted to believe that there's a better solution out there, they're chasing something that does not exist. If someone's telling you that they have a concept or a strategy that can beat the market, they are lying to you or they're lying to themselves. It's the simple truth. If someone really, truly cracked the code, they would not be offering to manage your money. They would be on Wall Street running a hedge fund earning $1 billion a year.
Michael, do you understand the flip once people get close to retirement is they use the fear and anxiety of market volatility and a bad market correction to sell that variable annuity, to sell them that silly, crazy annuity, to sell them that they've got a portfolio management system to help navigate some of this volatility. And it's all nonsense. It is what you'll learn if you come to the class, or if you stick around for a couple of more segments. We're going to talk about this. What you're going to learn in the class, what drives performance in retirement, isn't what you invest in stock pick or market timing. I know this is very difficult for people to hear us say this. We have all the data to support this. We're telling you what is going to drive your real returns, your real performance and real returns in retirement is where you're taking your income from that you're going to live on at different times of market conditions. So in other words, instead of trying to market time or stock pick, you're going to income time. You're going to time where you're taking your income from different portfolios based upon market conditions. Not change the investment strategies, not change your getting into them or out of the market during bad market events. It's where I'm taking my money from during bad market events. And that's what's going to drive real returns, Michael.
And that's why it's so tricky, because market volatility really is a risk. But the solution is not stock picking market timing. The solution is making sure you can income time to withdraw money from the right places at the right times.
Michael,
but that's harder to do.
Well, that's it. Why doesn't everybody do that? That seems logical. Here's why. And come to the class, we'll teach you. Because to properly set up a plan, a portfolio, and an income strategy to do that, it will take professionals 50 plus hours to design that, map that out, and have all the what we call pivot accounts. So come to a class so you can learn what you need to be looking for to know if your team is actually doing this right. Go to retirementplanningedu.org. That's retirementplanningedu.org.
Here in the studio today with Kirk Cassidy, Michael Mazarin. Kirk and Michael, they're both financial instructors with the Retirement Education Foundation, and you can get a chance to meet them and meet other instructors like them when you attend the Retirement Education Foundation's courses on retirement planning. And boy, if retirement is in your future or if you're newly retired, you want to attend these courses. They're incredibly valuable, especially here in a modern retirement when there are a lot of moving parts and a lot of changes out there. We want to make sure you have the latest information necessary to give you the confidence you need to walk boldly into retirement and enjoy it. I want to send you to the website, and this is a chance for you to understand where these courses are being held. It'll also give you a chance to understand when they're taking place so that you can find one that works great for you. Again, these are held at major colleges and universities. These courses are really kind of like a master's level class on retirement planning, and it takes some commitment from you. Donation to charity And you can choose either a 1-day, it's a full day, 8-hour course. You can split it up over 2 days. That's totally your call. But you'll be attending at one of these locations, the University of Michigan, Eastern Michigan University, Michigan State University, 2 locations there, either Novi or Troy. Oakland University is another location in the great state of Missouri. You could attend at the University of Missouri or Columbia College. Again, go to that website right now, retirementplanningedu.org. The phone number to register, 800-240-8981. You know, Kirk and Michael, as we talk about real and perceived risk in retirement, we often hear about our risk tolerance. And we are human, right? And so a lot of us have some pretty big feelings about risk, how much we can tolerate, how much we feel comfortable with. But you say it's actually those feelings, human nature, that can pose the greater risk. Tell me what you mean.
Well, Megan, I think this is an area people are going to struggle to appreciate until they attend the 8-hour class. The 8-hour class is 8 hours for a reason. There's a lot of really comprehensive information to share, which including tax. I mean, getting the tax code and things of that nature. And I mentioned tax. I mentioned all of these other variables because what will and should drive, let me rephrase that, what should drive your risk tolerance has nothing to do with your feelings or your emotions. I know this is the opposite of what everyone has ever taught you. Any person in the financial service industry, that's the first thing they're going to ask. They're going to make you go through a series of questionnaires, determine are you conservative, moderately conservative, moderate aggressive, or aggressive. This is nonsense. Your feelings, once you approach retirement, should be irrelevant. Frankly, Michael, if we're being honest, their feelings around risk tolerance should never be relevant. Ever.
It really shouldn't be, because the way someone feels about the stock market or about the economy or what might happen in the future.
It changes constantly, by the way. Go ahead.
Number one, changes constantly. Do we like who's in the White House or not? Do we like the most recent GDP print or not? Did we just lose our job and now we're assumed, well, if I lost my job, the economy must be in trouble. All these different things impact how we feel. We change how we feel constantly, and it should not matter. What should matter is, what do we need to give us what we want? How much risk do we need to take to give us the outcomes that we want? That is all that matters.
Warren Buffett said, you have to be insane to risk what you have for something you don't need.
So if someone has done a great job saving and they've been taking a lot of risk their whole lives to grow their wealth.
Which they should have been, by the way.
Exactly. When you're younger and you're growing the wealth, it's very simple. It is not difficult. It requires discipline, don't get me wrong, to work hard, earn well, live within your means, save and invest, take all the risk while you're younger, get all the growth. That's all well and good. Once someone has won the marathon, they say, well, I've always taken a lot of risk. I'm comfortable with risk. I've never panicked before, so I'm going to keep taking risk. For what reason? If you don't need to keep taking this risk, what are we doing? But people don't know, how much risk do I have to take, because there's no plan built for them.
Secondarily, the opposite applies. I am not a person comfortable with risk. I can't tolerate losing any money. Yep, but can you not tolerate losing money that you are not intending to spend for 10, 15, or 20 years? Your retirement is going to be 25, 30 years, maybe more than that long. If you're not touching those dollars for 10, 15, 20 years, your feelings that you're risk adverse, that's not relevant. We know over any extended period of time, the market's just going to go up. It always has. It always will until the end of the U.S. democracy, right? If that ever happens. I mean, unless you think it's all ending, I don't know what to tell you to do with your money. Bury it in the backyard, and your money's going to be useless then anyways. You need weapons, you need gold, you need silver, and you need to have a big vault with it. And maybe some oil, too, will help you. I mean, I'm kidding, Michael, but seriously, your risk tolerance need to be driven by your plan. What does your plan tell you? When are you going to spend those dollars? drives how much risk you should take. And then you have to have some pivot accounts. I don't care what your risk is. I don't care if you're aggressive or conservative. That has to be non-correlated to the markets, because the whole secret to this is managing sequence of returns risk. That is the whole secret to driving performance and driving success in retirement. It's the whole secret to being able to take 6, 7, 8% withdrawal rates every year instead of 3 or 4% like the rest of the world is going to tell you should only spend. You can take more if we stop using the conventional wisdom of, I'm a moderate, I'm going to put all my money in a 60-40 portfolio and just take out 4% a year. That is not the way to do it. Now, you can do it, but you're going to have to work longer and spend less in retirement. If you want to retire sooner, spend more, you have to have different, just think of it as buckets of money for different market conditions that you can pivot to based upon market conditions to pull your money out of. This is an advanced strategy. We call this dynamic income planning. You've never heard this before. We teach this in the class so you can go find a team that is actually executing this. And there's not a lot out there. So you have to be really, really disciplined and understand this to be able to find someone that can execute this for you. So this is why the courses are 8 hours in length. This is why we teach them over 2 evenings or 1 full Saturday. They're taught in major universities. The charity has been around for over a decade. We've taught over 10,000 people. Most of those people have somewhere between $1 and $20 million of investable assets. So you, yes, you, $3, $5, $7, $10 million households. This course is for you so you can find the right teams, because you probably don't have it now. All we ask is for you to make a $29 donation to charity to attend this 8-hour course, and you can stream it wherever you're at in the country while we're teaching it live from the university, so you can participate. If you'd like to register, go to retirementplanningedu.org. That's retirementplanningedu.org. We'll be back in just a minute.
And we're glad you're with us here on the Retirement Education Hour. Megan Mozak, alongside financial instructors Kirk Cassidy, Michael Mazarin. Great program for you. Reminder, you can catch this show and you can browse through our library anywhere you find your podcasts. You can download this and many more. Simply search for the name of the show, Retirement Education Hour. We want to make sure you've got the website so you can get registered for the Retirement Education Foundation's courses on retirement. These are like master's level courses, and they're held at major colleges and universities near you. Go to retirementplanningedu.org. That's retirementplanningedu.org for dates and locations. We've been talking today about risks in retirement, real risks and perceived risks. And, Kirk and Michael, I have to ask you, when it comes to risks in retirement, what is the solution?
Okay, Megan, let's do this. All right, so what is going to help you navigate risks, perceived risks, and is going to help you deal with the fear, anxiety that you're going to be confronted with throughout retirement? And as you get older, it's going to get worse, I promise you. And how do you manage those biases that you've created over a lifetime of people filling you full of information and noise, conditioning you to create these beliefs? All those beliefs to have you protecting your principal, reducing your spending every time there's a market event or someone you don't like who's being elected. Every time you get a little concern about market conditions, short-term market events. The answer is, what it always is for any of you regular listeners, is a real comprehensive retirement plan. Now, I would tell you, especially $1 to $10 million families, the plans that you have and you think you have is nothing like this. And so before I describe this, remember, you can go to the charity's website, retirementplanningedu.org, and you can watch a webinar where it's a 30-minute webinar where we walk through what a sample retirement plan what a real retirement plan should look like. And it is exactly what we spend 8 hours teaching you to better understand. That's a plan here's what a plan's going to do. A plan is going to have a lot of different accounts, not just an IRA, a non-IRA, a Roth, not just a few accounts. It's going to have many different accounts, typically somewhere between 8 and 15 separate accounts, because you're going to have accounts that you're taking income from based upon different market conditions. So if the market is up, you're taking it from these accounts. If the market is down, you're taking it from these accounts. If the market's flat, you're taking it from these accounts. A plan is going to run hundreds of iterations to figure out the most tax efficient way to take your income for the next 25 to 30 years. So it projects it out 25 to 30 years and then runs hundreds of iterations trying to figure out how I could pay the least amount of taxes over my lifetime. And we'll teach you. The plan that we're going to show you in the class and teach in the class that you can go to the website and see takes 50 to 100 hours to construct by financial professionals, CFPs, CPAs, attorneys. It is a comprehensive plan mapping out exactly where you're taking your income from for 30 years. And if there's a market event where you're taking your income from, whether you're Roth converting, how much to Roth converting, am I filling brackets or am I bumping brackets? What is my tax bracket going to look like in my 70s and 80s versus what it is now, and finding the most efficient path to take it through there. Having dynamic income planning strategies, buckets within buckets, long-term care. We didn't even get to that. All the risk mitigation. How can I make sure I never outlive my income? How do I bulletproof my plan from income? How do I bulletproof my plan from long-term care? What do I do when one spouse predeceases the other? What does the picture look like for each of you if one of you dies first, if you die at 70, 75, 80? It maps this out. It's comprehensive. You've never seen anything like this.
So, Kirk, as you're going down the unending rabbit hole of all the things that a plan answers, it reminds me of the person we spoke about earlier in the show, the gentleman who is in his early 60s, late 50s, early 60s, roughly $4 million, was offered a buyout, has plenty, but was too afraid to go through with the buyout because he didn't have any of those answers. He didn't know how much money to pull from which accounts at which times in which tax brackets, when to Roth convert, if to Roth convert.
What were the risk mitigation techniques?
What were the risk mitigation
Where are
tools?
the pivot accounts?
When to start Social Security, how to manage his tax brackets. He had no answers. And because he had no answers, he could not pull the trigger and retire. And so now he's going to work longer. He's going to eventually retire at some point and ultimately spend less because he doesn't have any of those answers.
You didn't even mention, we didn't talk about that today at all, but he had that particular person, based upon what he shared with us, had a very nice setup for tax planning. Could have saved hundreds of thousands of dollars in taxes over his lifetime if he found the right team. So that's the purpose of this class, Michael. Right? The purpose of this class, and I'm convinced now that person who was that went to our class will now find the right team because they have the knowledge to know actually what to look for and the knowledge to be able to say, I know you say that you're going to do all these things, but show me how you're going to do them. And then you're going to know if they really can do them or not, because you will have spent 8 hours learning all the different levers and everything that should be included in a retirement plan so you can have the freedom to be able to retire, so you can spend 6, 7, 8, 9% withdrawal rates and have less fear and anxiety. So please, I don't know how else to tell you. We're a charity made up of financial professionals, CPAs, and attorneys that are instructors teaching you how to find the right teams to help you. That is the purpose of the charity. To register for a class, all you have to do is make a $29 donation to charity. Go to retirementplanningedu.org. That's retirementplanningedu.org.